Hi, I'm Jeremy Watson, CEO of Bedrock Investment Property. I wanted to take a quick minute and talk to you about what type of asset you have and why you have it. When I was in financial advice for just over a decade, I saw almost $300 million of assets. And I saw the same recurring problem occur over and over and over again. And at the end of the day, it's a pretty simple thing that was happening, and it was costing my clients millions, hundreds of millions of dollars. So it wasn't a small thing at all. Here's the typical story. A client bought a property back in the 70s in San Jose, California, in some peach grove. And they've had that property now for 30, 40 years. As that property is appreciated because Silicon Valley happened and San Jose just completely exploded with all the tech boom, that property has gone from being $70,000, it's now worth $1.5 million. Now, anyone in the space will tell you the 1% rule says that that $1.5 million asset should be renting for about 15 grand a month. But because appreciation has gone so crazy in that market and cash flows or rents haven't, keep in mind, people who are buying in San Francisco today apparently have infinite money, where people who are renting in San Francisco today are still working a job or two. So those rents have not kept up with that appreciation. They have decoupled, and the value of those properties has gone up into space. So instead of getting $15,000 for your rent on that property, on a $1.5 million asset, those assets I see regularly are renting between $2,500 a month to $5,000 a month. So a third of really what they should be renting for. The real problem with that is, what type of asset was it to begin with? Did this person buy the asset to retire? Did this person buy the asset to just have a balance sheet? Did this person buy this asset to pass it on to their children? Because when you're looking at an asset that's $1.5 million but only renting for $4,000 a month, that's not a retirement asset. Because while all that stuff has gone crazy with the valuations, property taxes have also gone up. Prop 13 has helped some, but not all. And we've just seen that all of the expenses related to that property, we just did a $1.2 million 1031 exchange just this month, where the person was earning about $1,000 a month net after expenses. $1,000 on a $1.2 million asset. That's $12,000 a year of profit on something that's worth $1.2 million. That's 1%. You could make 3 times that much in a CD. Now, that client had held onto those assets for all of those years, because if they sold the asset, they would get capital gains murdered. All right, they would end up paying $500,000, $600,000 of capital gains, unless they did a lot of legal maneuvering that's semi-questionable to avoid it. So the truth is, they've always held onto this asset to avoid the capital gains hit. What they should have done is do a 1031 exchange. Go buy some properties where the cash flows do make sense. Go get a property go get a couple properties, build a small portfolio, and all of a sudden you've taken a $1,000 a month net to a $5,000 a month net. That's a really respectable thing. Quintuple your return. But you've got to ask yourself, what is my asset? Is my asset supposed to be a cash flow asset in retirement? Or is my asset supposed to be a legacy asset? An asset that I leave to my children? Now, the main reason that people are holding on to these assets, and I know there's hundreds of billions of dollars of this exact story in the country, because we do hundreds of millions of dollars of 1031s on this exact property type yearly, right? So the reason that people hold on to these assets is because if they sell them, they'll have to pay a huge tax, which they don't want to do. But if they just hold on till death, the properties will step up in basis. Their children will inherit a property worth $1.5 million that they can sell pretty much immediately upon inheritance for $1.5 million and pay 0 taxes. The question you've got to ask yourself is this: is my asset a retirement asset or a legacy asset? If it's a retirement asset, we can fix the cash flow. That's easy. We do a nice 1031, we find a property you like, we use our proven system, which has helped you buy over 4,000 of them in the past, and we help you get your income double, triple, quadruple. If it's a legacy asset, if it's the only reason you have that asset is to pass it on to your kids so that they're rich, then I'm not going to be able to help much with that. Because if it's a legacy asset and you're just going to hold on to something that's not cash flowing properly, the only way you'll ever feel wealthy in that situation is if you go out and mortgage it and pull money out and spend it. But if it's a low cash flow asset and you mortgage it, you're going to end up paying out of pocket for the rest of your life because it wasn't making much money to begin with. It's certainly not going to make much money once you slap a mortgage on it. So is it a passive income cash flow asset for retirement, or is it a legacy asset? That is a crucial question. If it's one of these with low cash flows, we got to do a 1031 exchange. That's what Bedrock does. That's what we specialize in. My team has done over 4,000 properties in the last decade. Feel free to watch a lot of our other videos. Thank you so much for joining me today. You have a nice night.